Welcome to CRA Rules for Selling Property Owned by Non-Residents of Canada. Let's get started. Have a look at this conversation between two brokerage colleagues discussing the non-resident seller's tax. Click the arrows to toggle between scenes. Click Next to answer a question about the scenario. Have you heard about the non-resident seller's tax? Did you know about the residency provision in the APS? The non-resident seller's tax we will review in this unit is not the same as the 20% non-resident speculation tax, or NRST, that came into effect in 2017 for foreign buyers in the Greater Golden Horseshoe region. We covered that in another RECO update course, and you should know what it entails.
Refer to the course resources to
Learn more about the 20% non-resident speculation tax, NRST. But once again, the tax we will review in this unit is a different tax that applies to a non-resident seller upon the disposition or sale of real estate property. This unit reviews some highlights on the tax applicable to the sale of property owned by a non-resident of Canada. We will also review some steps you, the seller, and the buyer involved in these trades can and should take to address Canada Revenue Agency requirements. We will review the highlights of Canada Revenue Agency, or CRA, requirements for selling property owned by a non-resident of Canada. Review the CRA's definition of a non-resident of Canada for the purposes of selling property. Discuss CRA requirements for buyers and sellers involved in these trades. Review your duties and due diligence steps when working with buyer and seller clients involved in this type of trade, and review CRA resources to learn more about this topic. How much do you know about the CRA rules for selling property owned by non-residents of Canada? The CRA has several tax rules that apply to non-residents of Canada disposing or selling property under Section 116 of the Income Tax Act. There are many types of property that fall under these requirements, but this unit will only deal with requirements applicable to the sale of real estate property. But how is this relevant to your work? You need to know about this because it will help you better inform your seller clients about additional compliance requirements applicable to them. It will also help you take steps to protect your buyer clients' interests when purchasing property from a non-resident of Canada. Click the Pro Tip button to learn more about taxes and real estate. Many different taxes may apply to the purchase, ownership, or sale of real estate, such as municipal property taxes, land transfer taxes, capital gains tax, foreign buyers tax, and non-resident sellers tax. Owners pay municipal property taxes during ownership. The seller of an investment property typically pays capital gains tax on the profit amount upon selling, not on the full sale price. Sellers of a principal residence may be exempt from capital gains tax. Taxes could also apply to profits made during an assignment sale, flipping a property after a renovation if it is not a principal residence and it's considered business income, when buying vacant land to build and sell the property afterwards, or when selling a rental income property. Urge your clients to consult with a tax expert to clarify any questions or concerns. Here is a summary of the CRA rule. If the seller of a real estate property is a non-resident of Canada for tax purposes, whether they are an individual or a corporation, they must let the CRA know about the sale or proposed sale of the property, submit required paperwork to the CRA, and pay taxes on the sale. The CRA will issue a certificate of compliance, either Form T-2064 or Form T-2068, once all requirements have been met. There's probably a lot of things you're asking yourself right now, like who is considered a non-resident of Canada? Or when does the seller have to notify the CRA or make a payment? And what is the process they must follow? And of course, what happens if the seller doesn't pay this tax? Click each item on screen to read more about these topics before advancing. We've only just looked at a very brief overview of the seller's responsibilities, but this is all very technical, so let's see how this plays out in real life. Shannon is working with a new client, Alex, who is referred to her by a family member. Alex wants to sell his property. He's Canadian, but has lived abroad for several years. Read the conversation on screen before weighing in on what Shannon should discuss with her client about the sale of this property. What should Shannon discuss with Alex, her seller client? That's not the best response. All options are technically correct, but there are steps Shannon should take immediately, like verifying the client's identity for FinTrack and meeting any other record-keeping requirements. The seller mentioned he's been living abroad for some time, which should also lead to a conversation on his tax status. If Shannon cannot confirm this at the listing presentation, she's expected to urge him to seek expert tax and legal advice on the tax implications of the sale. She must also follow up with him on the outcome of his consultations. Tax advice is something Shannon should suggest for all seller clients. Estate sales and investment properties, for example, can mean a big tax bill for the seller who may have to pay capital gains tax or land transfer tax as applicable. Naturally, a seller client will want to know what comparable properties have sold for to decide on a reasonable listing price. However, that conversation should not overshadow other crucial facts, like tax matters, that are necessary to discuss early on with your seller client. You must let your seller client know that they will have to warrant whether or not they are considered a resident of Canada for tax purposes. The APS may contain a residency provision dealing with the seller's tax status. Other times it may be a separate document, such as a declaration of residency. Ensure you highlight this to the seller in the APS or any other document you and your brokerage may use for this purpose. Point out to your seller client that if they are deemed to be a non-resident of Canada for tax purposes, they have obligations to meet with the CRA. For example, the buyer's lawyer could request the seller provide a statutory declaration and additional evidence to document their tax status. If your client may be considered a non-resident of Canada, urge them to get a head start and do their homework up front. Making inquiries, getting a determination of resident status, and fulfilling any other CRA requirements may take some time. This is another reason why it's a good idea to have these conversations early on and before discussing listing price and marketing strategies.
Refer to the course resources
To learn more about how the CRA determines an individual's residency status. On Shannon's advice, the seller client sought an opinion from the CRA and confirmed that he is considered a non-resident of Canada due to the time he's lived abroad. He will have to pay taxes on the sale of the property, so he needs to start the paperwork. What does the seller need to do to fulfill CRA requirements for the sale of their property? That's not correct. The client obtained an opinion from the CRA, and he is in fact considered a non-resident for tax purposes. This means he will have to get a Canadian taxation number, notify the CRA about the sale or proposed sale of the property, complete the applicable notification forms, and send the required forms to the CRA with payment or security. While the seller can ask Shannon to list at a higher price to offset the tax amount, it is a choice and not part of tax requirements for CRA compliance. Click the Pro Tip button to learn more. So far, we haven't discussed the buyer's angle on the non-resident seller's tax. Does this affect your buyer clients at all? Yes, it does. The CRA states that if the non-resident seller fails to comply with the requirements of subsection 116.3 and the CRA has not issued a certificate of compliance, the buyer may become liable under subsection 116.5. This means that the buyer may have to pay an amount of tax on behalf of the seller. Therefore, you must advise your buyer clients to consult with a tax expert to understand what to do to protect themselves from any tax liability. Click the numbers to view each recommended step in order before advancing.
Refer to the course resources
where you can find out more about a buyer's potential liability. First, buyers must confirm whether the seller is a resident of Canada for tax purposes. You and your client cannot make assumptions on who is and isn't considered a resident for tax purposes because it is not based on citizenship, but on presence. While the tax could apply to a foreign national, it could also apply to someone born down the street from you. Increasingly, many Canadian citizens may be considered non-residents for tax purposes because tax status is largely based on presence. This means that an international student living in Canada for several years could be considered a resident for tax purposes, while someone born in Ottawa who has lived abroad for several years may not be. In fact, many Canadian expats and snowbirds could qualify as non-residents of Canada due to the amount of time they live abroad. So, how do you and your buyer confirm this information? More on that in the next slide, where we will review steps you and other professionals supporting the buyer can take. Second, after taking steps to confirm the seller's resident status, the CRA requires the buyer to be satisfied with the information they have obtained on the seller's tax status. Third, if the buyer is not satisfied with the information they obtain from the seller or from their own research, and they believe that the seller may be a non-resident for tax purposes, the CRA states that the buyer is entitled to withhold 25% of the proceeds, minus the amount of the certificate limit, if any, from the proceeds. This withholding is to pay taxes on behalf of the non-resident seller. Note that while the withholding amount is approximately 25% of the proceeds, the total amount payable may differ. Because there is a potential tax liability for the buyer, take positive steps to create awareness in your buyer client about this tax and its impact on the trade. Just as you are expected to take the necessary time to review and explain each section of an APS or any other document that your buyer client signs during the trade, point out the residency provision and explain how it can help to protect them against tax liability. Explain any steps you and others can take to further protect their best interests in the trade. So, how can you help your buyer clients navigate this requirement and minimize the risk of tax liability? We've said that the buyer needs to inquire on the seller's residency status and be satisfied with the responses obtained from the seller. If not, the CRA states that the buyer is entitled to withhold about 25% of the proceeds of the sale. But let's start with the first step, inquire. Who is supposed to be making inquiries? Is it the buyer? How many buyers do you know are keen on finding out what the seller's tax status is? Buying a property is stressful enough, and many buyers never get to meet the seller face-to-face these days. So, is it you? Do you know how to find out what the seller's tax status is? And if you can't find out for sure, what else can you do to protect the buyer? Or is it the buyer's lawyer, or perhaps a tax accountant who should be helping to address any tax concerns? Ideally, you and other service providers working with a buyer should work as a team to help them navigate this requirement. Click each item to learn more. While you may not be a lawyer or a tax specialist and may not have all the information on hand, there are steps you can take to help your buyer client, even within the limitations of your expertise. First, review the APS to determine if it has a provision dealing with the seller's tax residency. If so, point it out to the buyer and explain how it helps to protect them against tax liability. If the APS does not contain this provision, ensure you document the seller's tax status with a separate declaration of residency. You can also express any concerns to the seller or their salesperson. Just as you would for any other key piece of information about the trade, document your inquiry and the seller's response in writing. If you have any concerns about the seller's response, urge your buyer client to consult with a lawyer specializing in tax matters who can provide them with definitive advice, confirm the seller's information and tax status, and document everything properly so it stands up to the CRA's scrutiny. Inform the buyer that if there are any concerns about the seller's tax status, they could add a holdback clause of 25% of the purchase price to the APS until the seller shows proof that they've met their obligations with the CRA. In addition to any steps you take, you must also urge your buyer clients to speak to a lawyer, ideally a tax lawyer or another tax specialist. This may be the best person equipped to do the necessary research and carry out inquiries about the seller's tax status. The lawyer should review the APS and may suggest adding a clause on a 25% holdback as a measure of protection for the buyer. They may request to see an opinion or determination from the CRA on the seller's resident status. The lawyer may also suggest requesting a sworn affidavit or declaration from the seller, or taking other steps to document their tax status. Advise your buyer client to also ensure that their lawyer documents all the steps taken to determine the seller's tax status. This is Claire, a registrant who was working with a buyer client interested in the property listed by Shannon. You may recall that the owner of this property, Alex, is considered by the CRA to be a non-resident of Canada for tax purposes. Look at this interaction and weigh in on the steps that Claire needs to take to protect her buyer client's interests. What should Claire discuss with her buyer client at this point? That's not the best response. A seller who has lived abroad for several years should raise a red flag immediately and prompt Claire to take immediate steps to inquire about the seller's tax status further and urge the client to consult with a lawyer. The salesperson needs to create awareness in the buyer that it's necessary to confirm this information early. Right now, Claire should not review comparables, make appointments to see the property with contractors, or encourage the buyer in any way before she outlines the steps to take when buying property from a non-resident and what she and other service providers will do to help protect the buyer's interests. Technology like electronic documents and signatures will ease the process of signing an APS, especially when the parties are in different locations. It is necessary for Claire to inform all her clients on the technology used, obtain their consent for use, and protect their information. But that can be done after she confirms the seller's tax status. Have a look at how this trade unfolds. Click the arrows to toggle between scenes. We know you are not a tax expert and that this is only a quick overview of this one tax requirement. Still, you are more aware of this rule now and in a better position to support your clients, buyers, or sellers through these situations. But where do you go to learn more? The Canada Revenue Agency is the best place to start. Their website should be your first stop. Learn more about the requirements that apply during the sale or purchase of real estate, and ensure that your support network includes knowledgeable and reliable tax lawyers and tax accountants who can provide your clients with definitive advice on this and other matters crucial to protecting their best interests. We know you are not a tax expert and that this is only a quick overview of this one tax requirement. Still, you are more aware of this rule now and in a better position to support your clients, buyers, or sellers through these situations. But where do you go to learn more? The Canada Revenue Agency is the best place to start. Their website should be your first stop. Learn more about the requirements that apply during the sale or